Okay, we're live. So, um, welcome me back. I guess I haven't done this in a little bit. It's been I don't know, like a week or something like that since I last did these videos. So this is gonna be pretty fun. A lot has happened since that day. Since I think my last video after the Tesla win. So what ended up happening with that is I ended up selling that up about uh that was actually a really annoying play because that worked. The spreads were really high on that, so it didn't actually end up working out as well as you could actually get it. But if you had waited, it actually ended up working out a lot better than you could have expected. So let me actually go through that really quickly and get into what happened with that before I get into anything else. So basically, I ended up buying a $75. So it was a 300 call for Tesla, and it was 1 week out, so I had an extra week on it, and it was a little bit more protected from my IV from the weeklies, and that was great. But it what ended up happening is there was a huge bid ask spread on it, so it was a little bit tricky to work around every now and then. But it was still pretty good. So what ended up happening was went from $75 and then hit about 1,300 around 304, 305, and then come morning, so I traded it. I sold it off more or less in the morning. I was kind of dumb because I could have waited a little bit longer. This is not the right morning actually. I could have waited a little bit longer when it kind of came back up, but you live and you learn, I guess. So when it came up to 304, I could have sold it up there at like 1,000, but the percentage was pretty good. It was about 1,300%. What ended up happening though later was, which I noticed actually later in the day, was Tesla was holding up around 295. And I figured there was some positive pressure that was pulling up, and I figured actually Tesla was in for another big move, especially because all the news that was about it. It was Tesla had done a great job and was fine. Was now, one, a profitable company. Two, it was on track to not being bankrupt, which is why I actually played this earnings in the first place. I don't really like playing earnings, and I'll talk about what else happened to explain that. But I figured that it was pretty much make it or break it for Tesla. So whatever the expected move was, it was probably going to beat it. And you know what? That's exactly what we got. We beat the play, and then we came here. And you know what? I sold it because I was trying to keep that profit right there. But if I had waited, and I totally had another chance because I actually dipped back down to about $600. So I could have used the profits from that to repurchase the position around 295, 293. And if I held it up, it actually kind of took off the next day, which is actually what I was saying. And I was talking about playing ER continuations. Those are very easy to play sometimes. You can, once you figure out what it is, you can just do exactly that. So that's what we did. And, well, what we should have done, actually. We didn't do that. I wish I had done that now. But, you live and learn. But what ended up happening was the position actually ended up going up an additional 2,500. So it hit about, I think at the end of its lifetime, at the end of its max, it hit about $3,600. A little bit more, actually. I think it hit closer to 4,000. But anyway, that actually is how that play went. So it went from $70 to $4,000. That was definitely one of the best plays of this earnings season so far. And yeah, and it was a good win, and that's just how that goes. So I'm not going to talk too much about this because I already talked about this. I do want to talk about Amazon. So this is the play that blew out. And I think I've said this before. I have more than one portfolio, and that was, that's important. That's how I get into certain types of trading strategies. However, I want to do it and stuff like that. So that's exactly what I do. So if we get into this Amazon play, what ended up happening was I was actually kind of bullish on Amazon. And that was actually where things got interesting in terms of thinking. Is I wasn't the only one. Many people were very bullish on Amazon, and so it was going up in reaction to it. So I had purchased a few different positions. About one from the profits that I had made from Tesla. I had bought a what is it called? I bought a call, just a straight call, going into the earnings date. So this one actually made, just these two little bricks right here, these candles had made over 60% just going into this day. And that actually would have been a great place to sell out. And you could have kept that and won whatever. So I put in 150, so I made 70 from it. It was good, and it worked out. Unfortunately, what ended up happening was the next day it started tanking. However, I ended up playing this a couple ways. So I bought a call, and this helped a little bit, but not as much as it should have. And that is entirely due to an execution on it. So I'll get into that now. So what I ended up doing was buying 1850. So I did two things. I bought an 1857 call spread up to 1857 and 1847 call spread on this. So as it gets closer to here to these prices, the call spread would go up, and this was on an account that was more or less, it was nearly about to die. It only had about $100 left into it. So that was how I played that one, and obviously that hit. That cost, I think, about 90 going into it, close to 90, and then tanked all the way down to about 2 cents. Now I'll get into something else about it in a second, but and that actually was the secret gem in what was this miserable play actually. But what I also did was I bought a straight call on a bigger account. I bought a straight call here. It was pretty in the money. It was close in the money. It was like 1800. Which I figured it could probably get into. And then it was also, what I ended up doing was I bought a 1640 and a 1650 put spread. And now that was actually the magic to all of this. And if it had not come up the way that it did after hours or pre-market, that play would have made minus the 1,000, which you'd lose from holding that call, and that call cost me 1,000. This downward play here cost me 300, and what ended up happening was the 1,000 would go to zero, and because I hit right in the money, it actually went down to 615, which was perfect. If it had held that throughout the day, what would have happened is I would have made about $3,000 on that, and this position would have just gone to zero, and that would have been fine. That would have been perfect. Obviously, if it had gone the other way, that actually would have been even better, but you live and you learn in that regard. However, neither of those things happened. The market basically cucked us here, and that's I don't know. That was actually a really annoying thing for me. I was genuinely really annoyed about this, which you shouldn't be. I mean, the market doesn't give a shit whether or not you're in calls or puts. They don't care. They just do it just does what it does. So when you watch this, so what happened was it came all the way down here, and it started pulling all the way back up, and it crossed, unfortunately, my strike, so it was now out of the money. When it was in the money, the spread between those was 1,000, and I had 3 of those. And so 1,000 times 3 would be 3,000, which would have been my max gain. I would have maxed out on that position. The other position would have gone to zero, and I would have made $3,000 minus the original grand put in, so $2,000. And that was something I was totally cool with. However, because it came back up, it actually did not protect us against the $1,000 loss. So that account had actually lost $1,100, and we had only made about $100 on the put spread. And because of that, the position ended up costing us it was a big loss on that account, and we did not fare well from that at all. So that is one lesson that was to be learned. However, because Amazon completely undid, and I want you to, and something that's really interesting about this loss is they had pretty bad guidance. It wasn't great, but also they had, and this was the craziest part to me, they missed by 8%. And 8% is really hit or miss. Like, that's, I guess, how much you expect it to kind of fall by. You fall by 8%. It makes sense that would happen, and it did. It actually did fall by about 8%. It fell a little bit more, but then came back up and came all the way back up. But that is $8 billion for Amazon. That is an $8 billion miss, which is incredibly high. And so that's something to kind of keep in mind when you were going into this was, how is this going to work out? And that's what happened. So, both my positions pretty much failed on me. That whole earnings was $1,000 loss. It could have been worse. I could have been really deep in calls on this. A lot of people put tens of thousands of dollars into an Amazon call and lost a ridiculous amount of money on just this drop off. So not great news for everybody. Amazon was a pretty big cuck for everyone in general, actually, which could have not really been anticipated, but it's something that could have been thought about. Was that hey, everything is kind of doing the opposite of what you expect. these aren't earned, these are beating, but they're coming down. They're losing, but they're making it up. Whatever the case is, they're acting in ways that you can't really anticipate. So Amazon, you could have thought about it. Maybe is it moving the opposite direction? Do you think it'll hit? And so there was something, and then an additional part about the put spreads, and that's what made the put spreads possible on this play. If it had stayed, what happened was the market makers were pricing in pricing it in to move, if it were to move down to around 1600 highs, like the high 1600s or even the 1700s. So they weren't anticipating anything in the 1640 area, but that's where we hit, and that's where my puts were. And so I got those really cheap, and that is the reason I got those really cheap. And now, obviously, like I said, they didn't work out. Regardless, if I had only been holding the puts, I would have actually made money. Or if I'd held puts here, a credit spread or a call spread here, and a put spread here, then that would have worked out well too. But because I was wrong, it did not work. So that ultimately is the issue here. Now, there is another thing about this play, though, that I really thought was crazy and interesting, was my call spread on the account that was dead hit 2 cents. Okay? And that's no big deal. That's exactly expected. The crush and all of that. However, despite the fact that it had hit 2 cents, it did end up coming really far back up. It didn't make back its entire value, which you can't even expect it to do, right? Because half of the value was priced in because of the earnings move, and because it didn't make it because of the earnings move, you got what you got. However, there was an even bigger play, a higher percent than even the Tesla play, which was that put spread. When that put spread had come down to about 2 cents, it held there for a little while. And then, with this complete run-up, if you had played that continuation, the spread went from 2 cents to about 50 cents. Now, to get that much, that position was basically multiplied by 25. It had to go up by 25 times in order to reach 50. That is 2,500%, which means, and mind you, it's a lot easier to get into put spreads that are closer in the money, or not closer in the money, but that are closer in that range than they are more expensive things than they are when they're cheaper, because you'll find a buyer and you'll find a seller a lot more easily. Now, it went from 2 cents to 50 cents, and it did come back down nearing the end, but it did reach a very high point. And my point there is, those are the types of continuations you want to play. Despite the fact I had lost 1,000 here, and about 11, it was actually 1,200, and then gained back maybe 200 from the put spreads. This spread could have made all of that back times a lot, right? Because a lot of the times, that right there is 2 10-baggers right there, and that is the play that we should have looked for. So whenever you hit a loss, that is the lesson here. Whenever you do hit a loss, do not get flustered or destroyed or internally tilted or anything like that. That is the time for you to determine, hey, something big just happened. I should take advantage of that fact, and then do that. So Amazon ended up coming really way the fuck back up, and that position, and the rest of the options didn't move at that rate, okay? It was this spread that started making the value. And yeah, they did have to come up quite a bit from such a big loss, but the fact of the matter is, we got out a lot of it, especially from that crush, and that is what made this play so perfect. So you could buy $500 worth of that, and if you buy $500 worth of that, then you multiply that by 25. Actually, I don't think that math is right. 2 times 25. Let me actually make sure I do this math correctly, because I don't want to. This isn't the kind of thing I want to get wrong. So if it went from 50, so if you bought say $500 worth of it, and it cost you 2 cents, you'd own 250 of those. 250 times, what is it? You'd own 250 times 50. Yeah, okay, that is correct. Oh my goodness. So there you go. Wow, holy shit. I didn't even think about that conceptually speaking at all. If you had bought, even when it was sick, even if it hit like 5 cents or whatever, if you had bought $500 worth, which is half of the amount that I invested into just this, and that is just barely a little bit more than I invested into the put spread, it went from $500 to $1,200 from, I'm sorry, not 1200, 12,500. So this continuation play was one of the best continuation plays that could have ever been taken. And if you'd played it knowing into that spread, that was a fantastic move. And I didn't know that was coming, but now I do, and I'll be on the lookout for it next time it happens. So that's all you can really do, is you can learn, and you'll figure it out, actually, and that's honestly not such a bad rep. Now, like I said, continuation plays. So Amazon did continue to go up. I did not continue to play it. After that had happened, we had taken a few other losses on some of the other accounts, and so some of these accounts were dipped down. Now, what we're doing is starting to look back into playing these things. I think I was talking about the TTM squeeze for some time now on Apple or Amazon. And so Amazon is starting to look a little bit more bullish to me. There is a concern now, which I should also get into. So, but I'll show you on this chart. So if you look right here, Amazon is a little bit more bullish. We're starting to build some momentum up. Whereas again, this tanked it down, but now it's starting to pull some volume back up. We are getting a little bit of doji-ish behavior. It's a little bit more indecisive, and you can tell based on this screen right here, we're seeing that we're opening up here, closing up, coming down, coming back up and down. So now we're having trouble. We're having a lot of trouble actually breaking 1800. We almost broke it this previous day, but it didn't happen. So that's something to think about now, is that Amazon is playing just like Tesla. Amazon is holding its value and coming back up and up and up, and that's a continuation you can play, and you can play that big. And I will be actually structuring a position, I think, in order to do that. So that's one. Number two, and you can see that with Tesla as well. So but I saw this once again, and now Tesla is actually doing a similar thing, is we're not getting as much bullishness. We're getting a little bit more bearishness, and it's holding at these bearish levels, to me at least. Now that it's above 300, that's great. Tesla's in for a completely different rock now, but we'll have to actually see what those mean. But there is another play that did this, and this was quite literally, like I said this to my friend. I was on the phone with him right before the market, not right before, but about an hour before the market opened. I asked him what BA was at, because we were in a BA call spread. We were in actually an iron condor that we had broken up into parts. And he was telling me, I kept coming back down to 340 and kind of holding those levels. And when he said that, I was thinking about it. I was like, okay, what I haven't noticed is more selling pressure from BA. I've just noticed selling pressure when it crosses above. And when it does that kind of behavior, that's when you want to start looking into, fine, it's holding these values at 340, and it's starting to gain, it's not necessarily gaining value, but it keeps attempting the same thing over and over again, right? And for us to win on that position, we would make $300 as long as the options expire above 350. We kept wanting for it to beat it. It didn't beat it. That was fine. That's just what it was. However, on Friday morning, when I was looking at these, I started thinking to myself, was it Friday morning? It might not have been Friday morning. It actually might have been Tuesday when I hit 350. I'm trying to remember exactly what date it was. Regardless of that date, let me check to see. Yeah, regardless of the date, it was I believe it was this day. So yeah, Tuesday. That's right. So on Tuesday, I kept seeing that it had kept coming back to the same level over and over again. And when you see something like that, you can start thinking in a support kind of way. And we know that 350 is a big level, so blah blah blah, all that shit. But I told him that this is probably the best time that we might actually hit today, and that you might actually want to just play it from bottom to top, because it had moved as a result to 3%, and 3% in terms of options is quite a bit, and you can make 200% from that. So I told him about it. Unfortunately, he didn't end up taking anything regarding it, but the positions moved up about 200%, and that was quite good. Now, regardless though, it is taking support repeatedly back at the 340s. So this is actually called a trading. This is called a trading range. So we can set this up as a trading range, right there. Yeah. So this is technically a trading range. It is trading here. We are seeing that there is more support at the bottom. We're not getting, the trading range was actually from 345 to 330. 339 or 340, and it broke it every now and then. So we are seeing more bearish or bullish pressure, but we're just not having an easy time breaking that. But I do think that now that it's taken support over however many times, and all the bad news with BA has kind of had its run, that BA has the potential to start kind of breaking above into the 355 levels. So we'll have to see how this week goes, but that is one of my opinions here. Now I'm gonna move over to this screen. All right, so this is a E-Trade, and so on here, this is just kind of how the market was moving. For example, Qualcomm had earnings, and they had taken off from there. They're hitting up to 200. So we had been moving. So we're getting some really good, we're getting some good volume and good striking up. So for example, SPY's at all-time highs, and that's great. And then Qualcomm has been breaking up. This is QQQ, but Qualcomm had earnings, so they had actually beaten into 83, and Qualcomm is great because they have gap fills that they have to take all the time, so those are really important to take a lot of the time if you can. Yeah, so I mean these earning plays, they're still coming. There's not that many left. I think there's let me see, actually. You can kind of tell based on these. There should be I don't have the calendar here, but there should be, there are not very many earnings left. So now it's kind of up to news and stuff like that again. Maybe some technical stuff. We're gonna have to see what starts propelling the markets now. But for the record, I want to point out that one thing that's really important is that the Fed had done a quarter cut again. We've gone from 2 to 1.75. Now, this is important because we haven't had any time we've had 3 cuts in a row. It's just a shit show. The market, it's not good. There's no way to spin this into a positive sense. This is not good for the market in general. We can see that we're hitting around 1.7, 1.5, and that's just not a good thing in general. It's not good market sentiment. That's not something that you can feel in support in the market. You don't think long term. You don't think that this is going to be great, and I don't. I think that we are. I was saying that we're gonna probably keep running up, but I said we're gonna run up maybe to 305, and now we actually hit 307, and so we did run up to that level, and now I think we should potentially expect a return, a down run, but we're gonna have to wait for some sort of catalyst, some sort of information. But because of that, you want to take a look at the TLT. The TLT is really important now. I've been looking at that for the last few days. I've been saying probably start looking into to debit spreads for those. We're kind of done with these, so I covered these two. So the Amazon put spread I didn't mention, but basically what happened was Amazon had taken off, or Apple had taken off around. This is an Apple, but I'll just show you. So Apple had taken off from around 250 up to this is weird. Was it Apple? Well, actually, no, it was. So Apple had taken up. I'd sold the credit spread. So actually, one thing I discovered in the process is credit spreads are very powerful ways of actually building small accounts, but it is actually kind of impossible to do, $200 to $10,000. It's very, 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 very difficult. And the reason it's very difficult is because you blow up one time, you're done, right? That Amazon portfolio blow up, it was probably it was a terrible thing for the account because it was more than half the account, because that, like I said, these are small accounts. We do have a bigger account, but these are not, that's just not good for these types of plays. So you need to make sure you position those properly. So in order to grow yourself, to grow your accounts, you're gonna have to have a bigger account to support it. And that's honestly just the truth of it, is that you can't lose that $200 because you can't make it back when it comes down to $36. Every now and then you can get lucky. A friend of mine had only $36 left in his account after blowing it up for like the third time, and he threw it into some Netflix play, and that thing made him $360, and he was back from where he started, and then he blew that up too. So it's happened before, and it's possible to do it more and more. But at the end of the day, you can't survive off that forever, and that's just what that is. So you have to learn how to grow these accounts while also growing bigger accounts to support these smaller accounts. So then you start looking into plays like these, just to help start building those up. Anyway, the TLT is something to watch though. So keep an eye on that. Keep an eye on the bond rates as well. So these are, we're far from the inversion at this point, but it doesn't actually matter to me anymore. So we're gonna see what the chances of a rate cut in December are. We're gonna see what really goes down this week. If we get a fourth rate cut, then it's over. Then we're gonna see a serious down run, and it's gonna be just like last year when we had an entire stock market rundown. So we are gonna have to see kind of what goes on. I mean, none of this is for certain. None of this is clear cut or anything like that. But it is important to keep your eyes on everything and just watch to see what kind of behavior you're watching in the market. And based on that stuff, you can actually take those, but you can take them responsibly in smart ways. So, yeah. Now, like I said, SPY's at all-time highs. It's Saturday, so the ES is actually open, so we can actually take a look at what's going on. Look at her go, 2006. So it is holding up. It's holding pretty green. So we are in for, like I said, we were going to get the rally. We're getting the rally. How long is this rally going to last? I can't tell you. How long, when is a recession coming? If there is one, I still can't tell you. But, keep an eye on the indicators, keep an eye on the marks, and then you can probably figure it out based on that information. So, yeah, that's what I have to say about that. I think that is the end of this video. I'll cut it for now. Thank you guys for listening. You've been awesome. I can't even hear you, but, thank you for listening. You know what? If you guys have any ideas of what maybe you want to look at, what kind of stocks, what you're looking at, what you're going to watch this week, whatever it is, let me know in the comments below. Yeah, it was great. Thanks, guys.